Good evening, everybody. Welcome to this meeting of corporate governance. We'll go straight into the agenda. Do we have any apologies for absence?
Sorry, we have apologies from Councillor Brown, and we have Councillor Smith substituting, and a late apology from Councillor Davidson.
Thank you very much. Do we have any declarations of interest? No, there are no declarations of interest, so we'll then move on to item 3, which is the minutes of the previous meeting held on the 24th of July. And do we have anything on the minutes, any comments or recommendations for change? We're all in agreement with the minutes. I'll sign them. Right, we then move on to item 4 of the agenda, which is the annual audit letter, which is on pages 9 to 20 of the meeting notes. And this is going to be presented by Alistair Colston.
Thank you, Councillor. So this is our annual audit letter. It's a document which summarises the work of the external auditors throughout the 2017-18 financial year. I think if councillors have had a chance to read this, then they'll identify that there's very little new information in this. All this is a summary of what we've already done, and just confirming that after the meeting on the 24th, we did indeed sign the opinion of the accounts as well as our value for money opinion without any issues raised. So I think it's another opportunity to once again thank Pete and Sarah for doing a very good job of the accounts on what was an accelerated timeline from the previous year. So thank you to the team there. The only other thing that's new in this document, which hasn't previously been brought to your attention, is we noted in the meeting on the 24th that we weren't able to provide our audit certificate in July because we hadn't concluded the work on the whole of government accounts. This document now confirms that we did indeed complete that work in August, and we issued our certificates confirming that we'd done the work over the whole of government accounts in August. Other than that, I don't think there's anything in this document that hasn't been here before, so I wasn't proposing to go over anything again in detail, but happy to answer any questions if anyone had anything.
Okay, thanks, Alistair. Do we have any questions for Alistair on the report? Okay, I've just got one question, Alistair. Could you just expand a little bit on page 13, or our page 13, your page 2 actually? Could you expand a little bit about your view in relation to the pensions liability? It's a nutshell that we keep trying to crack. Could you just expand on what you've said there?
Yes, so pension liability we include as an audit risk because there are significant estimates involved in compiling that liability figure, which, if moved only slightly, could create a material difference in the valuation of the pension liability. So this is the long-term liability in relation to the pension obligations of staff members, current and previous. Obviously, it's very volatile. Things like interest rate, inflation rate, rates of increase in pension can have a significant multi-million pound impact on that liability if they're moved by 0.1 or 0.2%. So we include this as a significant risk to make sure that everyone's done their due diligence about the figures that go into that estimate, to make sure that those small things that could have an impact on it haven't been misstated, creating a larger very small changes in input haven't created a very large change in output. So we did all that work over the inputs, over the information that was sent to the actuary, over the estimate, over the assumptions that we used to compile the estimate, over the detailed accounting entries that went into the accounts, including the additional work over the prepayment that was made in the year, and we didn't find any issues coming out from our work.
So are you saying that there's a very low risk that there'll be any variance in the level of pension liability moving forward then, based on the work that you've done?
No. The liability changes year on year. So every time those assumptions move year on year, that has an impact on the long-term liability as well. So small changes year on year have a larger impact than you'd expect. The other thing that can happen that I didn't touch on when I was previously talking was the rate of return of assets. So in between, there's a triennial valuation for the pension every 3 years, where they actually do a full valuation of the assets in the scheme, and that gives you a better idea. But between those years, they roll that forward using assumptions about the return on assets. So every 3 years, there's a potential for that asset valuation to be fairly significantly different to what it actually is.
Which is what we found. Which is why I sort of go down the line of asking the question. I don't know if you want to come back on that, Pete.
Yeah. Well, just to add, really, obviously we did at the last meeting, we did go into some detail about, because when we went through the statement of accounts, and I did put in a specific section in the covering report on pensions. At the time, well, the actuaries were thinking that things looking quite favourable at the moment, but clearly next year it could all change. We all know that. I won't say that horrible word that's happening at the end of March, or maybe happening, who knows. But that could obviously have some significant impact going forward. I'm afraid we're going to have to watch this space, as we are doing, and we keep on monitoring it, and we'll report again. When we report again on statement of accounts next year, we'll have certainly a much better idea in terms of where we're at, because the following year will be the triennial valuation. So that's when we get the 3-year valuation, and that's when they do they do look at potentially changing the rates, and they look at things like the prepayment option and all of that. So certainly we'll have more information next year.
You see, from sort of my point of view, really, we don't want to get to the 3-year period and then find out, the figures have changed and it's not good. And what I'm trying to get to the bottom of here is, and it does go back to what we discussed at our previous meeting, is what measures can be put in place ongoing to keep an eye on it, and not only keep an eye on it, report it to this committee so that we know what's happening. But that was something that we agreed you were going to work on. I don't know what is happening on that, because we never really got any further.
Well, we did, because that was the purpose of the extra information I put in the report at the last meeting. Clearly, we can't have a quarterly report on pensions. That will cost money from the actuaries, and that's not something. Things can change that quickly. That's an unreasonable expectation.
Yeah. Okay. So things change that quickly then, but what I'm trying to say is things do change quickly. We need to know in this committee, not till the next annual report. So is that possible?
No.
Hang on a minute. So if something changes, you're not able to tell us. Is that what you're saying?
I'm not saying that. I'm just saying what you're asking is unreasonable. We agreed at the last meeting we would present more information, which is what we did. And I said I'll do the same thing next year when we get more information again.
Okay, we'll just park that for the moment. Councillor Lawrence.
Thank you, Chairman. A different topic, completely, one which is not quite as opaque as pensions, but very nearly, which is to do with value for money. Ultimately, we councillors are responsible for ensuring that our taxpayers get value for money, and I see the term coming up here, so my sense is not Twitter. You've made some comments about value for money, basically saying, as I read this, that there's not a lot of risk and we're getting our value for money. I'm looking at the particularly one area, which is the delivery of financial and savings plans. Now, each year the officers come forward with an aggressive savings plan. And we hear nothing more about it until the following year when it's announced that we've met it. And I notice here that, for example, we are roughly £300,000 under target at the moment, but given that we've got a number of more months to go, I think that's probable. And no risk is, so do not see any issues in response to this risk. Would you like to comment a little further on that whole area as to how you deal with and how you assess how these financial savings are being made during the year?
Yep. So on this one, we look at I think that £300,000. Pete, you might want to correct me, but that's £300,000 over the next 5 years that hasn't been identified, not £300,000 that still hasn't been saved. Is that right?
It's up until 1920, the 300,000.
Yeah. So overall, in respect of the work we've done, it's fairly high level. I think in respect of this council, there's been a history of setting reasonable cost saving plans and achieving those. So for us, when we look at those, the level we do is at a slightly higher level than we might have to do elsewhere. What we do is we look at those overall plans, see how they're applied to the budget, and make sure that those budgets have been achieved. That's the way that we'd approach that work on looking at the delivery of saving plans.
So, may I paraphrase that? You can't see how it's being saved any more than we can, but like us, you rely on the fact that it's always been met so far, so it'll be met this time.
We do look at the specific schemes as well, though. So we look at the specific schemes, we look how those schemes have been translated into the budget, and then make sure that those budgets have been met.
So does that imply that there are schemes put in place that don't actually get published through to the councillors?
Well, let's go back to basics. When we set the budget, we have the transformation programme, which is part of the budget. That details all the savings we've had to date and the programme going forward. Then when during this financial year, we report on where we're at with the budget, which includes this transformation programme savings for that particular year. So we are reporting it every time we come to you with the budget report. We're reporting on the fact clearly if we're not achieving the savings, then we aren't going to be hitting the budget. That's the top and bottom of it.
I'll just come back to the pensions liability question again, Alistair. In terms of risk, high, medium, low, how would you view the pension liability situation in that it could vary on high, medium or low?
So when we talk about risks, there's a potential confusion here. So I'll just clarify what we mean here. In respect of how we're classifying this as a risk in respect to the pension, it is an audit risk. So our risk is that there's a significant risk of material misstatement in the accounts rather than risk to the organisation. So just sort of separate the two things there, because when we talk about risk, there's a potential to confuse the two things. In respect to risk to the organisation, I think if you read the accounts, you'll understand that it's one of the largest liabilities, if not the largest liability in the accounts, and there's also an element of that is uncontrollable, or a large element of that is uncontrollable by the council. So I think if we were to sort of use your own risk gradings there, then I'd leave it to Pete to sort of say how that fits in with your risk management.
When we again go back to the budget financial strategy, and we obviously focus on pensions as well within that, we've got a risk section, and clearly pensions is high risk. That's for us. That's for every council, not just this council. Sorry, just one other point. I'm pretty sure, without fail, that risk that Alistair's quoted in this report will be in every council's report as a high risk. That's that we're having to look at.
Yeah, okay, well thanks for the answer, but we are only concerned with this council. Right, any other questions? Okay, right, so
Just add something.
yes, sure.
Yeah, So I just want to put on record thanks to Alistair and the team. Obviously, this may be the last time we see Alistair, I don't know, because obviously we've got the new auditors, Mazars, which will be commencing work fairly soon. I've got a meeting with them later, and we haven't got them. I'm not sure we've got them on the work programme, but certainly we'll have some sort of introduction to them at the next audit committee, corporate governance group.
Just going to ask about that. What progress? So I was going to ask about the progress of what they call I can't remember exactly what their name was.
Mazars.
Yes. How's that developing?
As I say, we've got our first, myself and Alan, the chief executive, are seeing them in the next couple of weeks. So,
Okay.
but they'll be, obviously we'll be working through the audit plan.
Okay.
But they'll be, as I say, they'll be reporting to this group at the next meeting.
Okay, any further questions on the annual audit letter? Okay, so the recommendation is that Corporate Governance Group note the receipt of the annual audit letter. So all of those in favour? That's unanimous. Thank you very much. And thanks, Alistair, for attending, answering our questions and everything that you've done for us over the last period. Thank you.
I shall miss it.
So we now go on to item 5 of the agenda, which is the internal audit progress report on pages 21 to 30. And for this one, we have Mr. Chris Williams.
Thank you, Chairman. So this is our regular progress report, which updates the committee and councillors on the delivery of the internal audit programme that we agreed at the start of the year. It's a relatively brief report this time. The programme is on track, and we are just about where we expected to be when we agreed the plan at the start of the year. Section 2 of my report sets out the 5 pieces of work that we have concluded since the last meeting. All of the substantive assurance pieces have come out at green, which is obviously a very positive place to be, and we have undertaken 2 pieces of advisory work as well. So in terms of the substantive pieces, risk management, there were no recommendations made as part of that review, so we concluded that the council has an effective and thorough risk management framework in place, and we felt the need to make no recommendations on that one. There was one minor housekeeping issue within the business continuity piece that we raised, but it was only a low priority action, which was agreed by the management responsible. A piece of advisory work was completed looking at the council's response and preparedness in terms of the GDPR requirements, which are obviously sort of taxing every organisation at the moment, and this was very much an advisory piece rather than an assurance piece. So we made 7 actions. We don't tend to categorise advisory actions, but we made 7 actions that were agreed by management, just in terms of moving the council along in terms of towards its full compliance with GDPR. The council is on a journey, as is every other organisation at the moment, in terms of that compliance piece. We didn't consider that the council was behind the sort of the general population, as it were. There are virtually no organisations in public or private sector, I think, that could honestly put a hand up and say they are completely GDPR compliant already. Most, if not virtually all, organisations are very much on that journey, but we were comforted by the programme that the council has in place, and I know that the committee has looked at that in detail and had presentations on that in the past. Council tax was a piece of substantive assurance work that we undertake on an annual basis. There were 3 low priority housekeeping issues that came out of this. Again, that's a really good result. Typically, just by virtue of the nature of council tax and the volume of information, the amounts of pieces of paper that go into that system, there are very typically minor issues that we come up with as part of the audit programme, and there were 3 housekeeping actions that were agreed with the management team on this occasion. And then we carried out a further piece of advisory work on the asset investment programme that the council has entered into. Again, that was a very positive report. There were no high or medium category recommendations, and just 1 housekeeping issue that was agreed by the management team. So overall, it's been a positive period in terms of the internal audit results. Looking ahead on section 3 of my reports, we've set out the remainder of the programme that was agreed at the start of the year. As I said at the beginning, everything is on track. The business rates review has been issued in draft, and the IT strategy review, I think, is at debrief stage. So we've completed the field work on that, and that will come through to the December meeting. And the remainder of the audits are all planned in with the relevant managers, and we should be completing the programme by late January or early February, which is in good time to present our annual opinion early next year. So I'll pause there and take any questions.
Thank you very much, Chris. Do we have any questions for Chris? Okay. Well, it appears that the programme is making progress and on target. But just out of interest, what was the minor issue within the business continuity? Do you have that information? So, as an right, yeah, yeah, it would just be interesting to see. I mean, as my experience tells me, sometimes it's a small issue that can actually be part of a range of issues. I'm not saying it is, but just out of interest, it's personal interest more than anything else, just to see that we're not heading towards any problem areas. So yes, okay. No questions then for Chris. It's a on target report. The recommendation is that the Corporate Governance Group note the first progress report for the report as per Appendix A from the Council's internal auditor. All those in favour? That's unanimous. Thank you very much, Chris. So we now move on to item 6, which is the Revenue and Capital Budget Monitoring Q1 report on pages 31 to 42, and this is going to be presented by Sarah, I believe. Is that correct? Thank you.
This is the first report of 2018-19, and this report's at period 4, which is 4 months into this financial year. The headlines to report on this Q4 report, period 4 report, is that we are broadly on target with a small revenue underspend predicted of approximately 63,000. If you refer to the appendix on page 35 and page 36 and 37 will show a breakdown of what this predicted saving is made up of. The planned capital variances of 10.237 million are shown in Appendix C from page 38 onwards. And on that page, if you go to the variance column, you can see that the largest variances that make up that 10.237 million are for the depot relocation, of which there's a report expected excuse me, in October, and the asset investment strategy, which was discussed at the last Corporate Governance Group, is due to a slowing down on investments due to the risks surrounding property market and a focus on other projects such as the depot. So overall, this report is reporting a stable position at Q1 with a minor, albeit positive, variance on revenue. but still an anticipated transfer of 1.19 million into reserves.
Thank you, Sarah. Do we have any questions? Councillor Cooper.
Thank you, Chairman. I'm looking at page 36, which is revenue variance explanations. Under neighbourhoods, we've got an item there, streetwise, additional items in the prime contract costing £56,000. Correct me if I'm wrong, but I thought whilst streetwise come under the Rushcliffe umbrella, that they were a separate entity and they worked independently. And I just wonder why we have to perhaps subsidise, perhaps is not the right word, but we have a cost against that of £56,000.
The £56,000 represents an increase to the work that we've asked Streetwise to do for us. So at the start of the year, we have a planned programme of what Streetwise are going to do for us. There'll be new areas of land that may be transferred to us, or additional bits of work that we say to them, can you complete this work? That results in an increased payment to Streetwise for that work. And this particular variance is made up of a large increase in fly tipping incidents. So Streetwise are down to collect X number of fly tips, and that number has far exceeded what we pay them for.
Councillor McKinnon.
As I've just answered Councillor Cooper, that increase is additional work that we've asked Streetwise to do above the original prime contract.
I think this is where you have this link between performance and finance, because if you look at the PMB report, there's an area about fly tipping there, and you'll see so there's some commentary there about where it was trying to target those hotspots, if you like, where there is fly tipping, and putting cameras or whatever to try and spot and try and prevent things that way. Yeah, okay. But if you refer to look at the PMB report, there's reference to it.
Yeah.
Okay, Councillor Walker is next.
Thank you, Chairman. Business rates are mentioned in a couple of places in the report, particularly at 5.3, and disproportionate level of revenue coming from big areas such as the power station. At what stage are we at in terms of planning ahead, bearing in mind the upcoming closure of the power station and the impact that that's going to have?
Well, obviously the power station is a massive issue. It's not just it's a sort of county-wide sort of issue, really. I think there are, as far as I'm aware, there are some discussions going on. I think it's 2025, the decommission of the power station, so there's a bit of time yet, but clearly it is a major issue that there is some discussions going on at the moment to try and plan for that, and how we manage what will be not just ignoring the business rates fact, which is obviously from our perspective will have a big impact. Obviously, more importantly, what you actually do with that particular site, and that's subject that is subject to much will be subject to much debate.
Councillor Smith.
Connected with that, I seem to recall a year or so ago, if not longer, that we were talking about pooling business rates. Didn't we pay into a pool so that it balanced it out? I just wonder, one, are there any other power stations in Nottinghamshire scheduled for closure? And two, there's a lot in the paper at the moment that business rates could go up by 2.6% which could have a very adverse effect on the high street. And if the government does anything to reduce that, that will hit us as well, won't it? So I wondered, how you're looking at that.
Well, I'll take both. We still have the business rates pool. I think there's at least 2 other power stations in the Bassett Law district, and they've got the issues. But the benefit of the pool is it does spread that risk. So obviously we get the whole of the business rates. For those of you that don't know, we've got the pool with the districts and the county. The city don't sit in the pool, so they're outside of it. So that does help manage the risk. So when we do get, because what normally happens, just by way of information, in the past we've had appeals. So when they actually, say for example, they close down one of the, I don't know what you call them, the incinerators or cooling towers, but when they close down one of those or repair them, it affects the business rates, and then they put in an appeal, and that's when it hits us. We got hit about just before I started, I think it was. But the benefit of being in the pool does help manage some of that risk. Sorry, the second part, yeah. What normally happens is there's something called the multiplier, which affects business rates and they link it to inflation. And that's what you're talking about. Now, the government could, for example, and I don't know, and this we have to wait for the autumn statement, and something like that, they may actually say, because there's already seems to be some pressure building up. Well, there's pressure anyway, because people have complained about levels of business rates. So it wouldn't surprise me that if they do that, and as you rightly say, clearly, if we don't get that full inflation amount, there will be a hit on the level of business rates we do receive, but we'll have to adjust our budget accordingly.
Councillor Hetherington.
Yes, I think we have to be rather careful about what's happening at the power stations. It is in 2025 they have to stop burning coal, but Ratcliffe Power Station is going. Historically, it used to have a gas turbine plant for what's called peak lopping in the actual for the day. That is when there is a sudden peak, like everybody puts their cookers on at Christmas for Christmas dinner. The grid takes a dip, and they are going back, I've been told, to actually operating the peak lopping at the site, and also there is the on research at the site, which is shared between the power station here and their parent company in Germany, where the people actually are floating back and forth between the two. So the site will not close altogether, but the parts of the site that will close is obviously a major area, and but we will be left with some input from the area that's left, which is going to be doing a different type of producing electricity than what it does now, basically, because if they don't, the lights will go out.
Councillor McInnes.
Clearly, we've got the cash, being invested. So, and you'll start seeing the converse side of it is if in the favourable variances, we've got some increase on our interest income. Okay. So there's a trade-off there.
Okay.
we're, well, as at the moment, we are anticipating spending that money in terms of the guidance we've got to spend it, yeah.
Thanks, Chair.
Any other questions, Councillor Cooper?
Thank you. I'm looking this time at favourable variances on page 37. Correct me, I'm sure you will correct me if I've got this wrong. Favourable variances, and there's quite a number there, which adds up to quite a considerable amount. So I can't work out how the total variance at the bottom is 83,000. Could you explain that to me, please?
Yep, the 83,000 is the net variance, so it takes into account the adverse variances of 363 in the section above, and then offsets that with the 378 favourable variances.
Right, thank you. And just one supplementary to that. What did we do right with the Eastleigh Leisure contract cost saving of 20,000?
That's the saving in the management fee from last year to this year.
Okay, we've not changed management though, have we?
No, it's the same
It's
management.
just an internal matter that.
Yeah.
Okay.
Yes, thank you. I'm just on page, hasn't actually got a number, but it's in Appendix C, and it's third page of Appendix C, and it's about additional capital works identified under the arena enhancements, and additional capital works identified part of the cost will be met by a grant from Notts County Council, I presume, is that?
Yes.
Yeah. I just wondered, I mean, I'm very welcome if they want to pay us money. I just wondered what it was that they were paying us money.
Don't tell Kate Courts. Can you just answer one question at a time? Thank you. That's right. With the
Yeah, it is for the car, towards the car
Yeah,
park. works.
okay, that's it.
Councillor Smith.
So to do with footpath.
You had a question.
Not a fan, but I can get that information to you. Yeah. But it's been, even though it has been expanded, it's still been quite busy on occasions, which is good.
Do we have any other questions?
I'll just say, hopefully there should be enough room for the parish conference tomorrow. So.
We hope so. Do we have any other questions? Okay, right, so first question from me. The variances are in excess of 15 are favourable and adverse. What about other variances? Because this might be a simplistic way of looking at this, but you could have 10 variances of greater than 15, but you could have 50 variances of £8,000 between 8 and 15, which would be a whole lot different picture to what we've got here.
Again, I refer to the appendix on page 36 and 37, sorry. If you look at the bottom of the favourable variances, you'll see a section that says sum of minor variances of 68,000. So although we report on this table of variances above 15 because they're the material items, we do actually pick up variances of less than 15, and that's what that 68 represents, is the net underspend of those small variances.
So were there any adverse variances, because that's not mentioned on page 36?
Yes, there will most likely be a combination of adverse and favourable, but overall it's a net favourable position.
So what I'm getting at is, let me rephrase the question then, and perhaps you've answered it, but adverse variances less than 15,000k, what is the total of any adverse variance total that was less than 15k?
I can find out for you, but I don't have the answer right now.
Come back to you on that.
Yeah.
Okay, yeah, okay. That I think it's important because
can I
we
just-
don't know what that figure is. It could be a very high figure. Yeah.
I mean, I think we need to think about what we're trying to report here. We're focusing on where the biggest issues are in terms of the. So you don't. We give you a list, a whole list of variances, and then you'd be. Yeah, exactly. I think again, it's a degree of realism is required.
I think it is realistic to want to know, because if the variance is below 15k or £250,000 and you don't know because you can't tell me, there may be an inherent issue that we don't know about. It may be spread across a lot of little issues, but added together there may be a root cause to that. So we're not asking for all of the whole list, we just want to know what the total is so that we can make some assumption and ask further questions.
I understand what you're saying, Councillor, but I will also add that internal audit do review budgetary control and our methods of budgetary control, which we do get a clean bill of health. So I will say that in terms of our methods of control, but I do understand the point you're making. Thank you.
Okay, that's great, thank you. Right, so just a couple of other questions that I've got here. So could you just explain under transformation what that actually means? Because on the adverse variances, under transformation, we've got asset investment, hold on investments, I understand that. I understand why that's connected to transformation. But then occupational health counselling, £30,000, and property staffing to meet increased asset base, £30,000. Could you explain what they are, please?
To explain why they're in transformation.
And what they are.
Yeah, well, transformation it's basically Kath Marriott's area, which incorporates HR and property as well as transformation. That's why they sit there.
Okay.
The property services staffing issue, that's just
That's 30,000.
yeah, so that's obviously to additional costs in relation to the asset work that we've been doing, so there's an extra cost there. The occupational health counselling, I think, is reasonably self-explanatory. That relates to occupational health and with regards to our own employees, so where we provide occupational health for those employees, and that's what those costs are.
Yeah, I understand what the topic is, but I just don't understand why we weren't prepared for it, or what's happened to create this extra cost.
And for occupational health, clearly, if there's more issues with some staffing, then we incur extra. It's not necessarily something we predict. We base budget normally on, say, the previous past years. If that, obviously, for whatever reason, occupational health spend increase, then obviously that's why there's that particular figure.
Yeah, Councillor Smith.
Is I done there? Oh, sorry. Oh, well, wasn't it? Is that to do with when people have been off sick, getting them back to work in a sort of measured and gradual?
It's partly that, but it's also partly helping people stay in work as well. So it's a positive from that perspective, because it's not all work related. People do might have personal issues or whatever, and we, as a council, as a caring council, and wanting to keep the services going, we try and help them as much as we can.
I think what would have been helpful, maybe we could do this moving forward, is as in the other pages, in the other appendix, we've got some explanations based on the number of questions we've had regarding Appendix B and the variance of the adverse variances. I think it'd be helpful in the future if we do have perhaps some narrative below each one to help councillors understand a little bit more what that topic's about, because clearly a lot of the questions have been about that particular page. So moving forward, when we do the report next time, could you consider doing that, just giving a bit more narrative on the adverse variances, because that's the topic that everyone's focusing on.
I think we've answered most of the questions in any case, so we'll look to do it. See how the report looks. It's just what we're trying to do is get a balance between having a nice, concise report and giving you the right levels of information, and so we can look to do that.
Okay, that'd be appreciated. That'll help us focus in the future to dig a little bit deeper. Right, do we have any other questions?
When I read it yesterday, I thought, why is the bowls, floor and carpet having to have a 65,000 spent on it? Wasn't it all replaced when we had the refurb and rebuild it?
There were some issues with the actual floor itself, so we had to rectify those.
Should that not be under warranty?
No, it wasn't. No.
Right, any further questions? So it's recommended that the Corporate Governance Group forward the report to the Cabinet approval, and noting that the projected revenue position for the year, with a minor 0.6% variation of 63k, is in the revenue position due to the expected business rates position, and that the capital underspend of 10.237 million as a result of the capital scheme rephasing and projected savings. All those in favour? That's unanimous. Thank you very much. So we now move on to item 7, which is the work programme. Peter.
It's a standard work programme. As I say, I think what we'll add in for the December meeting is for Mazars to come in, perhaps do a presentation and introduce themselves.
That'd be
so
very
we can add that to the programme.
Yeah.
But as I say, it's fairly standard stuff. The Treasury Management Report, it won't actually be called that, it would probably be called something like the Asset and Investment Report, because as you're all aware now, we focus on asset investments as well as our cash investments. So be a slight change in title to that.
And are we getting our friends in to do some further training on
We are,
investment
yes,
strategies?
yes, yeah, we are. Got the dates out.
Yeah, that's November.
This is a date for that. We will send something out to all members. This is what, sorry?
21st.
23rd of November.
21st.
21st, sorry.
Yeah, 21st. Yeah.
Yeah. So, yeah, that's vitally important that we attend that training. So please make a note in your diary. Right, okay, so that takes us to the end of this meeting. It's been the shortest meeting we've had in a long time. Thanks everyone for attending. Thanks Peter, thanks Sarah, and thanks Tracy. And we'll see you next time. Thank you.